So this is gives you kind of a nice picture on the spies here. Yesterday morning we did have this little blip down where we came down to the prior highs. That's why I bought. It's pretty low stress, easy trade. It dropped, I think, maybe another nickel. 7 cents after I bought it, popped up, got back above 245, closed at the high, gap was higher this morning. So buyer is firmly in control there. Let's see. That's good. Starting to spend some time here about this 245.5. It'd be interesting to see if the market opens and kind of spend a bunch of time here, maybe the first couple hours, and then break out of this range from 245.5 to 245.90. Play that break. IWM still below 142. Obviously consolidating at the high. So just a little bit, slightly less strong than the other major index ETFs. So it's worth keeping an eye on. I have alerts at 142, 142.15, just to see if it spikes up there again. Well, look, it spikes up there, and if it comes back down then to 141.80 and fails again, then I look for it to roll over a buck and a half, something like that. Qs. This is 7-8 days in a row up now since it tested the 136. So it's coming into the high. 143.80. If you just look at this since the bottom, you don't really see. I guess here there was a red bar back on the 13th. What you're looking for in terms of a change, this is going to peter out in the next few days, and you'll probably get a nice down move, is just a strong reversal bar of this trend, and then kind of either a retracement up and failure, making the lower high, and then short on that failure, or after the hard down move, consolidation and a break to the downside. We'll talk about that with some levels as we get that failure. So those are the three. So we're getting into earnings season now. So there's going to be a lot of stuff to choose from every day. I'm not going to have time to really explain to you why I didn't discuss some things and picked other things, but it's based on my 20 plus years of experience trying to get a good blend of things I think people have the best chance of making money in with good risk reward. So every day it'll be a bunch of things that I'll cover. If people put stuff in the chat and I look at it, and I take a look at what's in the chat, and I think that it was borderline or close to making the cut, I may look at it if we have some time. But there's a lot of stuff to cover, and I like these meetings to be done by 9:10, so you have a minimum of 20 minutes before the open. In fact, as we get into earnings season, you'll find maybe that I'll start starting the meetings a little bit earlier, maybe even at 8:40 to make sure we're done before 9 o'clock. So the first one is Morgan Stanley. It caught my attention because of the numbers are so solid. If we look at the daily, so the big move in Morgan happened back in November, where it gapped up to 34.70, goes strong, and then went up for a few more days. We're moving sideways and then continuing higher. So if we go back to here, it's $34 stuck back in November. It's 46.60 bid right now. So it's about it's up about 35% since then, which I think it's significant, but I still think there's probably a little bit more upside there. We have 47. It has to deal with this 47 where it got crushed from and actually took out the support here at 42. We probably were looking at it right here. It went through it, came back down. It actually looked pretty bad here, but eventually just moved sideways. This was actually pretty. Well, this was pretty messy. So what you want to see is a bounce off of that area. And then it actually has a lower high here. So I guess the way I would look at this from a bigger picture perspective now is you want to see it starting to get some closes above this area here. So let's assume, if it doesn't break out today, or if it breaks out about 47 then comes back in, you want to see some closes in this area right here to give it some energy to make a breakout to go to 48 to 50. All right, so we got to kind of our first resistance area. Just chilling out. It's on the conference call right now. Out of the 46.5. So far failed 46.80. I have for support there. Nothing till 46. So what I'll look for right on the open is if it starts to get a little bit of profit taking as it's up $1.50, is I want to see how does it first behave in this 46.50 area. If it shows not much weakness around here and starts holding above 46.50, hopefully if I move back up into this area here. If it starts to hold below and takes out 40 cents, then you got to see if they're willing to flush it all the way down to 46. But like many of the other names we've looked at recently, if they flush down, you want to look for them to bounce all the way back. It's a long list of names. Next one is CSX. Initially, this went up in the after hours when they reported. Then they made a comment about having 25% earnings growth the next year, and then people extrapolated that exactly to the penny, and it came out a few cents below where their estimates are for next year. And people were like, whoa, and then they sold the shit out of it. I don't know about that. That doesn't really make a lot of sense to me. So here's where it was in January. It gapped up from, it was in the high 30s. It gapped up to 43. So from here to here, on a percentage basis, that is a big move for rail stock. So any type of thing perceived as negative with a non-momentum stock, again, this isn't a Netflix or a Tesla, that's up this much, I could definitely get some people to sell, which they did in the after hours, and it came almost into this. Oh, it did come into this, I guess. 52. What did I put on the sheet? 52 and 52.60. All right, so it's already bounced from both of those support areas. In the after hours, it actually went through the 52.60, did 52.25. We come in this morning, it's above. Looks like they're on the conference call. They're probably clarifying. They did it after their buyback. If it comes back, if it flushes back into this area here, 52.65 to 52.35, this is where I'd be looking at buying it. And then you'd want to see it bounce and get above 53 the way it is right here in the pre-market. Resistance at 53.40, 53.50, which is almost up to that. And above that, 54. So all I'm trying to do until I get a lot of price action information after the open is trade it off of these, potentially off of these prices. This is kind of the first range we're working with right here. Good. Can you give us any interesting updates from the call, please? All right. The next one is VRTX. So VRTX, this has had a monster run coming into this. Really good cystic fibrosis news, which is just a nasty, nasty disease. There's no cure. And And so I have these big moves where we double and then we go back down, and now it looks good to go. Where like this drug, they're finally going to hit the market with this. And if we go back over the last few years, it was 40 to 60, then it was 60 to 80. Made the run to 140, back down, tested the 80 area. And so this is an all-time high. And in this situation where you have a stock up 35, you don't need a lot of selling pressure and a lack of people willing to pay up 25% to get a really nice pullback. So even if the stock is going to 180, 190, 200 in the next weeks, months, you very easily could see a move down to the low 60s first, or even 150 over a week or two if people really don't like the risk reward up here. You could get price upgrades and all that stuff, but again, people are long from much lower prices, and you really need a lot of people to step in and buy at higher prices to cushion the blow if that profit taking comes. So started at 170 in the after hours. They did drop it out to 162, that $8. This morning was consolidating right below there, and the first move was down, not up. Looks like some people were willing to buy it here. Again, it's done 500,000 shares, which is about a third of its daily volume, which is good. But when the market opens, and if there's a million shares to sell, that's when you can see that flush down kind of to that after hours. After hours low of 162. In this situation, if you want to compare it to Netflix yesterday, if it gets the flush on the open and then is bouncing and takes out the pre-market and after hours high, you can look for another leg up. It's going to be a tricky stock. It's going to be a widespread and risky. The next one is ASML. We don't talk about it much. It's an EDR. I used to trade it a lot many years ago. Chip equipment sector, like the CLAC and the AMATs. And you can see that's why you can tell it's an ADR just looking at the daily chart, all the gaps. But it has made such a nice run to the upside that we could be looking at a sell the news situation. Now the numbers are really good, but that a lot of times doesn't matter. What we do is we look and kind of see where it was back at the beginning of the year. It looks like it gapped up on earnings from 105 to 110. Now it's up another 40% or so. And so that should be enough potentially to ignite a sell the news. Also coming into earnings, look, people bought it from 130 to 143. So you have a bunch of people here buying, let's say below 136. So let's take a quick look. So my thought on this was maybe they would spike it on the open closer to 150. You'd short it, maybe catch a move down to 148, 147, something like that. A lot of times we'll do these and we'll catch it short, and sometimes it'll go in much deeper than we expect, and you get lucky. So that's the thought there. But I wouldn't risk too much on it because of the ADR, and it could be a little bit crazy unless you start to see some very nice tight consolidations intraday. The next one is UAL. UAL, like all the airlines, has run up a lot the last 6 months. Buffett's involved in the memes. Here's the daily. Here's the news. They beat EPS by a little bit, and recently it failed above 80. Let's just zoom in here a little bit. So I guess there was a lot of selling in this 81.5, 82 area here over the course of a couple weeks. Then when it tried to rally back up there, I failed at 81. Since it's actually gapping down today, that may not be in play, the 81 resistance area. So initial reaction was down, and it's still down. So sellers in control unless it starts to hold above, let's say 76.30. Notice the initial move was down to 76.30 right there. See that wick? It popped back up to 77, and then they started to actually hold. I mean, this is a pure example of people just trading off of a price area, pure technicals in the after hours. Initial move, you get your little reaction bounce, and then it gets below that after hours, and people are willing to just hold those offers there to see if they can get it to go down further. Now, it didn't come off much more. It came off about $0.50. It's still down there. If this 76.30 gets blown through right on the open, you could see it very easily bouncing back up to 77, 77 and a half. To zoom out. So then we have 76 as a potential support. It's below there right now. Next potential support, 75. Have a look down there at 75 to see how it acts there. Certainly the risk reward for a bounce from 75 is pretty good. And then second day stuff, Hog had a decent bounce in the morning, but in the afternoon had really good follow through. You can see in the morning it was below the pre-market lows, so it was a nice short. Came back up to the pre-market lows, and then got stopped a bunch here. Then it wasn't going up, so we shorted. Started to roll here, but held right here, which you may have heard me. I think I was watching it even then, or maybe not. I might have been gone by then. And then stopped out above whatever 47.20. But the interesting thing to me was that it had a nice multi-hour consolidation, and then when this wedge broke to the upside, consolidated 48, it broke to the upside again, and that's pretty clean. So even if you came in like I did with a short bias, and you were stopped, I think the price action did show you along, certainly in the early afternoon, which was clean. From 48 went to 48 and a quarter, held here, and then went up another $1. So it was very tradable. And Hog is sometimes not the most tradable stock. So the way I guess I would look at it today is, so it's being bought in the afternoon here at 40, 85, 80 to 90. First, I'd watch to see if the first move is down. If it comes back up here and fails, then I would look to make a play back down to here. Upside follow through. I just don't really think there's any chance the stock is getting back above 50. Or it's 50 to 50, 30. I would be short a lot if it got up to that area. The next one is Netflix. And we talked about this in the morning meeting. I don't remember exactly what I said, but very few stocks are capable of being up this much, getting some profit taking. This is about the least amount of profit taking you would see. Profit taking down closer to 172, 170 would have been more comfortable in terms of a risk reward, playing it back up to 179. It did flush through 175 right in the open. I believe I called that out. After popping up, it came back down. It didn't even test the 175. It got to like 30 cents and consolidated above 178 before having the $6 move. I think we talked about upside for 184 to 185, maybe 184, 186. That's what you got. It's just a natural place where people would be selling it. So that's the only reason why. It doesn't mean it can't go to 190 to 200 in the coming weeks and months. But the momentum people, the world of which I come trading from over the years, just how you look at it. It's just like, oh, break out from 180, and you kind of 184 to 186. You look at the ATR as 570. That's how you come up with that. So even today, like say it takes out the yesterday's high and goes to 186, people will probably sell into that, and maybe it'll come back down to the bottom of this consolidation range. And got to digest this move, most likely scenario. So that's it. Let's wrap this up. 39.10. That was my goal, to be finished at no later than this. As always, be patient and good luck.
Hope you enjoyed that video. You can actually watch that video if you're subscribed to our Trader 90 before the market even opens. What stocks are in play? What levels in those stocks are important? And how we might go about attacking that stock. That's Steve Spencer, 20-year veteran trader, laying it out there every morning before the market even opens. A really, really powerful tool to start your session off on the right foot. So right now we're offering a trial that you can take advantage of to access this meeting and other meetings throughout the day. We have a meeting at 11 a.m. Eastern where you can sit down with Mike Bellafiore and listen to him talk about what's going on during the morning session, what stocks were in play, what the best trade opportunities were, as well as maybe some things that we're looking at heading into the afternoon session. So I really encourage you to take advantage of that trial.